Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look on euro currency. Current updating video mostly dedicated not to the technical side but some fundamental processes that we see currently around the markets with some geopolitical effect, with financial and effect as well. So what's in general has happened with the recent few days. So actually you've heard probably about that recent statement. Russia is moving troops out of the border and sending them back to the common dislocation places. So that provided some big relief to the markets, and you can see that they altogether have shown the nicely looking 30% retracement. So actually, as I said, within the probably couple of weeks ago, that no invasion will be, at least by the initiative of the Russians, just because from the geopolitical point of view, this is absolutely useless direction of the developing of the geopolitical game. So it brings no really advantages if Russia invades in Ukraine. So it's absolutely nonsense, I would say, from the geopolitical point of view. And I said that if any response will happen, it will happen absolutely in different place and in different way. And that's why this is long-term game. But currently you can see that it was announced, once the announcement has happened that Putin moving the troops out of the border, the Sun immediately has posted the article where it forecasts that within the few hours an invasion will take place. So I suspect that very soon the Western countries put the sanctions on Russia just because of no invasion. So anyway, how we should treat this process, very interesting how it makes impact on the markets. I suspect that it's not occasionally the Western countries, especially the United States, sending lots of weapon in the Ukraine. So because if we'll take a look at the situation that we have inside the United States, especially in the financial sphere, you'll see that there really very need the war to happen, because the inflation that we see currently, it is not just the financial inflation, or better to say monetary inflation. The monetary inflation could be struggled with the interest rate change that Fed does, but currently the economy of the United States has also the structural inflation, which stands in the production stage, in industry, and that can't be depressed, can't be struggled with the just moving rates higher, and everybody understands that. It's it's the things that is not official in media, but that is really the major warning factor. And the problem is that this should become relatively soon evident relatively soon, so somewhere to the next meeting in March, and after that in April, May, that will become evident. And to avoid this, some external factor needs to put the responsibility on it. In this case, the Fed efforts will be represented like they do everything possible and impossible to save the ruined economy. But, as you understand, this is war, this is force majeure, what we could do. So this is the major idea. And in the current circumstances, taking it all together, despite that we see the troops are moving out from the border by the Russia, they are not actually sending a lot of weapons in Ukraine. And I think that from that standpoint, we're not out of the woods yet. So everything, we've got some relief, but it seems that markets still suspect something, and it's just could be seen in reaction. So yes, gradually markets are turning back to the financial background, and you could see it in a way how bonds responds to the recent information. So you can see dollar starts moving slightly lower, interest rate starts moving slightly higher. So currently euro stands in a bit tricky environment because interest rates are rising, which is not really good for euro and supporting to the dollar. At the same time, dollar gets some safe haven release. So you can see it's moving slightly lower. But at the same time, risky assets do not show the big upside bounce. For example, on the stock markets, you could see that 30% retracement yesterday on the DAX has happened. The same you can see on the S&P, minor pullback, although relief seems to be really strong. So troops moving back to the dislocation out of the border. So everything is done. It's nothing should happen. But it seems that something is still around it. Question exists. And if you'll take a look also on Bitcoin market, for example, you'll see that in recent few sessions it was upper direction, but today suddenly upper direction stops and market turns down again. So it seems that market still suspects something. From that standpoint, of course, we could try to follow the technical picture, technical patterns that we have on the euro currency, but we need to keep these risks in mind that this really could happen. So if we take a look at the euro currency, you could see that recently we've got some healthy bounce up from the area that we have predefined. So from that technical point of view, this works really nice. As you can see, oversold 50%, 618 support, see the bounce up. Here is as well, you can see this upper direction, but if we'll take a look at the hourly chart, could we call this upper direction as really some thrusting or providing some really good bullish background? Well, it's a bit choppy and not really very fast. We could treat it as a kind of the hand and shoulder shape is forming, or maybe as a cup in the handle or something of that sort. And theoretically, chances exist that, well, theoretically it is possible to use it. So if we wouldn't have any geopolitical problems, I would say, well, this is the pattern that we could try to follow because it stands at really strong support area. And currently, guys, in this situation, the choice is up to you. So we do have some technical response, technical normal price behavior around support, which could be treated as a bullish potentially, but with the external risk that could come in any moment, you understand that overall situation is tricky. If you're ready to take this risk, you could try to go long and take long position here with a possible upward continuation in the euro and following to the hand and shoulders that we have on daily chart, as we have discussed it, right? So this left shoulder head, this might be the right shoulder. If you're not sure, then we need just keep an eye on what will happen, because something sooner or later should happen around it, around this area, and the risks that we discussed recently, especially speaking on the dollar index, that personally I do not like that market wasn't able to reach the neckline. This is not good for bearish reversal pattern. It mostly suggests that it might be upward continuation instead of downward action here, guys. So with all the stuff that we have on the table, it's a bit more responsibility with making any decision on the current trading. So, but formally, theoretically, we have this shape, and if you'd like to take the part with it, well, you could try it. It might work. So why not? That's actually what we have currently on the euro. And in fact, if you'll take a look at any other markets, you will see approximately the same things there. So let's just keep watching and be careful. Keep an eye on what's going on in the mass media concerning especially in some geopolitical questions.